The U.S. dollar is higher versus the major currency pairs as the week comes to a close. We do have Michigan consumer sentiment coming out at 10 a.m. That's the only economic release. It is projected to be down slightly from the previous month. I'll go through the technicals that are driving the three major currency pairs in this video, so let's get started. Those three major currency pairs are the euro dollar versus yen and sterling versus U.S. dollar. I'll start with the euro versus U.S. dollar to kickstart this video. Taking a look at the current price action and trading here today, you can see it's up and down, and that up and down is taking the price above and below the 100-hour moving average as the market decides what it wants to do. If in trading yesterday and again today, the price highs here did extend above the August ceiling level, which had a number of different highs coming through here, which confined the pair at 1.1730, 1.17419 in the month of September. We have seen the price move above and below that level, but we do have had instances where, again, the price did either find support or resistance, including yesterday, even though it moved just a little bit above it. And again, today, where the price again moved a little bit above it, but rotated back to the downside. So what we know is that the upside seems to have sellers that are prefer to lean against that level, that area, and stay short of the high price reached earlier this week, more recently. So that is keeping a downward bias as we head into the weekend. The price currently is trading below the 100-hour moving average of 1.1724, giving a little bit more of a negative bias. Does that negative bias force the price back down toward the 200-hour moving average, toward the swing area, down here near the 1.1692 to 1.17028. In trading earlier this week, the price did come down to that 200-hour moving average, tried to hold support after one failed breakthrough here, but then broke below that level in trading yesterday, and on its way back down to a retest at 61.8% retracement of the trading range since the July high. That's what this represents, before bouncing back to the upside on the failed break of that 200-hour moving average. So this area is going to be support in trading here today. Watch for support buyers to come in against that level as we wander into the weekend, and look forward to next week's new week where the FOMC will give us a more clear direction of U.S. policy going forward, and perhaps the trend in the U.S. dollar. Taking a look at the dollar versus yen. Next, what we saw in trading yesterday was a sharp move to the upside into resistance at a swing area, and then a sharp move to the downside. We saw the price break back below the 200 and 100-hour moving average. Ultimately, if you blur your eyes and take a look at what's been going on in this current currency pair, there's lots of ups and downs in the pair, mostly between this area right through here, going all the way back to August 1. And so it's hard to stay in love with the market. What we did see in trading last week and early this week was the 200-day moving average up through here was broken. But then the last two times that the price came up to that level, we did find willing sellers against that level. I guess it was all last week. In trading this week, the price came up to the 50% retracement at the session. At the week's high that occurred on Monday, found willing sellers against 50% ahead of the 200-day moving average. So a lower high versus a technical level, but nevertheless against a technical level. More recently in trading yesterday, we came up to that swing area, found willing sellers, and today we're finding willing sellers against a 38.2% retracement so far. So ultimately, we're going to need to get above this level, 147.95, 148.816, to increase the bullish bias. If we can do that, then look toward the 50% 200-day moving average. Conversely, if the price starts to trade more consistently below the 200-hour moving average, and I know it's frustrating with the breaks and the moves above and below it, the 100-hour moving average will be the target back again on the downside for the dollar versus yen. It's choppy out there, folks. Be aware. Finally, the sterling versus U.S. dollar. We had economic data come out, mostly weaker. In the UK, GDP was 0.0% flat. Industrial production was a surprise to the downside, or more weak to the downside. That sent the pound versus U.S. dollar below the 100-hour moving average, below the 61.8% retracement. But as you can see, that momentum could not be sustained, and the market rebounded back to the upside, despite that weaker data. But right now we're trading right around the 61.8, right around the 100-hour moving average. So the market is kind of figuring out which way it wants to go into the weekend. What we do know is that the high price from this week, right here and right here, stalled against the high swing area right through here and here and here and here. And so this is a nice ceiling here that's being formed right between the 1.3576 and 1.35918. That it could give the seller's a reason to sell if the price can get and stay below the 100-hour moving average. If we can do that, then we could see some further liquidation on not only the ceiling holding, but the price breaking back below the moving averages. And if we get below the 200-hour moving average, we still have the 100-day moving average on the downside to get to and through. We fell below it in trading, I guess that's last week, but then broke back above it toward the end of last week, and has been able to stay above that moving average since that time. So there you have it, a look at the 3 other major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.